TSMC just triggered a massive financial seismic shift, closing out Q1 of fiscal 2026 with absolute dominance. Total revenue obliterated all barriers, erupting to the $35.9 billion mark and establishing a crushing 41% year-over-year breakout velocity. The high-performance computing reactor served as the primary engine, pumping $21.9 billion into the system. Simultaneously, the combined force of the mobile, industrial, automotive, and consumer segments provided a solid $14.0 billion in secondary thrust. This massive cash flow crystallized into $23.8 billion in gross profit, locking in a record-shattering 66.2% margin. Ironclad discipline ruthlessly compressed operating expenses to $3.0 billion, allowing the enterprise to proudly secure $18.1 billion in net income. The ultimate catalyst? Earnings per share landed at $3.50, officially shattering even the most stringent Wall Street valuation models. Dissecting the revenue matrix, a V-shaped recovery is executing with absolute ferocity. Following a severe contraction driven by weakened smartphone demand and brutal inventory corrections, this manufacturing engine has initiated a ruthless breakout sequence. Fueled by massive AI server demand, high-performance computing has ignited an unstoppable vertical trajectory, establishing a staggering 36.6% CAGR. This platform now swallows 61% of the ecosystem via a 20% quarter-over-quarter acceleration. The remaining battlefield is starkly divided. Automotive and IoT maintain relentless momentum with CAGRs of 22.9% and 14.9%, alongside 11.8% from others. Conversely, the smartphone segment is retreating to a 26% share with a mere 9.9% CAGR, while digital consumer electronics actually contracted by 4.4%. Legacy mobile demand has permanently surrendered the runway to the new absolute monarch. High-performance computing. The technological firepower is utterly dominated by superconducting microarchitectures. The entire advanced technology spectrum at 7nm and below has officially swallowed 74% of total net revenue. The 5nm generation roars in the lead, capturing a 36% share and pumping $12.9 billion directly into the system. Accelerating violently. The 3nm powerhouse seizes 25% of the mix with $9.0 billion, while the 7nm node contributes 13%, delivering $4.7 billion. Historical data exposes a spectacular metamorphosis as this elite technology tier relentlessly breaks out from a 45% baseline to ascend to today's 74% summit. The 3nm node has triggered hypervelocity, poised across the corporate average margin by the second half of 2026, confirming that Moore's Law is now exclusively manipulated by a single global superpower. TSMC has officially evolved into the Foundry 2.0 era, establishing a terrifying strategic monopoly. The power disparity is ruthlessly exposed as they seize 72% of the global market, completely isolating Samsung at 7% and SMIC at 5%. The war for 2nm supremacy is already over. TSMC proudly maintains a rock-solid 80% yield rate, while the competition falters below the 55% commercial threshold. With Fabs 20 in Baoshan and 22 in Kaohsiung accelerating into mass production, TSMC now dictates supreme pricing power, exceeding $30,000 per wafer. The industry's ultimate choke point now rests on CoWES advanced packaging. A sector TSMC is scaling from 45,000 to 130,000 units per month to absorb 110% of hyperscale demand. This expansion engine is fueled by a massive $56.0 billion capital expenditure, funneling 75% of total HoLook directly into the most advanced logic and packaging nodes. To defend the crown, a sovereign silicon alliance is expanding across a highly strategic transcontinental axis. In the Americas, the $165.0 billion Arizona fortress is expanding to a projected 12 megafabs, targeting an output of 300,000 units per month. Its mission is to forge the most advanced microchips, from 3nm down to A16, directly supplying Apple and NVIDIA on U.S. soil. Crossing the Atlantic, the ESMC joint venture in Dresden, partnering with Bosch, Infineon, and NXP, executes a critical mandate, pumping 40,000 automotive chips at 28 and 16 nanometer to shield the German electric vehicle empire. In Japan, the Kumamoto site accelerates to a 100,000 unit capacity, serving Sony and the cluster of local Japanese tech leaders. Finally, at the corporate heart in Taiwan, absolute closed-loop supremacy is maintained via manufacturing hubs feeding a massive 120,000-unit COES engine in Jiayi and Nankang, locking down global supply chain security. Projecting into the 2030 cycle, the shift toward autonomous agentic AI is driving a hardware supercycle with 59% growth velocity. This storm creates a $320.0 billion Foundry 2.0 market, where the top 5% of elite corporations will swallow 100% of all industry profits. The Angstrom war officially detonates as TSMC unleashes the A16 process with superpower rail technology, reaching a density of 38 megabits per square millimeter to face off against Intel 18 as power via architecture. But this high-stakes game conceals lethal structural risks. In March 2026, Iranian missile strikes severely damaged the Ras Laffan complex in Qatar, threatening to sever over 30% of the global helium supply absolutely vital for cooling EUV lithography machines. Simultaneously, geopolitical instability in the Negev desert of Israel risks a total bromine shortage, a critical chemical choke point that could paralyze high-bandwidth memory production and bring the entire global AI infrastructure to a grinding halt. Ironclad discipline is being executed with absolute precision. The lifeblood fueling innovation, the research and development budget, has been aggressively pumped to $2.1 billion, maintaining a 13.5% allocation share to sharpen competitive fangs. Simultaneously, selling, general, and administrative costs are tightly squeezed at a 16.6% metric, reaching just $0.8 billion. This entire war machine operates at highly optimized fuel consumption levels, strictly capping total expenses at $3.0 billion. This relentless efficiency creates a diamond-hard shield, protecting the industry's most coveted profit margins and ensuring every dollar drives a technological breakout. Profitability is sending shockwaves across global capital markets. Tracking the momentum across the cycle, the net margin trajectory has carved a perfect U-shaped recovery. Breaking out from a 37% cyclical bottom, profitability has triggered maximum thrust, piercing all resistance to establish a new dominant baseline at 50%. This margin explosion directly amplified core performance, driving a spectacular vertical breakout in net income from $7.2 billion to a staggering $18.1 billion. This confirms the machine is operating at peak efficiency, converting the entire infrastructure supercycle into pure shareholder wealth. The top-line trajectory is currently executing a violent upward pivot. Following an accumulation phase, actual results have consistently taken a sledgehammer to market estimates. The focus is now on the upcoming cycle, charting an aggressively steep expansion route. Management has officially upgraded full-year 2026 US dollars revenue growth projections to over 30%. This revenue stream is programmed for back-to-back detonations, shattering the $39.6 billion mark next quarter, tearing through $43.3 billion in Q3, surging to $45.7 billion in Q4, and converging on a $45.9 billion peak by early next fiscal year. This relentless acceleration confirms the infrastructure supercycle has only just ignited. The core profitability barometer is injecting extreme euphoria into the investment community. From historical trenches near $1, non-GAAP earnings per share triggered a ruthless recovery sequence, crushing the $3.30 estimate to print a massive $3.50. Fueled by absolute pricing power that effortlessly passes inflationary costs on a fable's clients, this profit-generating engine shows zero intention of hitting the brakes. The earnings velocity has locked target coordinates on $3.71 next quarter, followed by $4.07 and $4.28, fully primed to obliterate the $4.31 objective by early 2027. This is a heavyweight profit generator operating at maximum efficiency. How are the world's elite financial institutions pricing this dominance? With the global semiconductor market projected to hit a staggering $1,100 billion in 2026, TSMC sits at the absolute apex, capturing 100% of the industry's economic profit among the top 5% of elite firms. Out of 51 top-tier analysts giving ratings, a massive 41 have issued a strong buy mandate, alongside 9 buys and merely 1 hold, with absolutely 0 bearish resistance. The consensus target is anchored at $442.50, representing a 19.43% premium over the current $370.50 baseline, but maximum projections are stretching to an incredible $550. Global capital is making a life-or-death wager on TSMC as the irreplaceable linchpin of the digital age. Please note, the views expressed in this video reflect opinions at the time of publication and are based on sources believed to be reliable. This content is for informational purposes only and does not constitute investment advice. Thank you for watching. Hit subscribe, smash the like button, and let us know your TSMC price targets in the comments below.